is a place where warmth is a value. It's part of our ideology. We are a family of art. It's an extended family of art, and hopefully by the end of the day you will see why Mana is changing the rules of the game when it comes to the art world in every possible way. Mana is a multi-purpose art center, and you will see that we are a place for art storage, but not a typical place for art storage. We are managing art collections, but we are also the home of some 85 artists who's working out of their studios. We have about 10 gallery spaces where we present shows of all kinds of art, pretty much 35 changing exhibits every year, which is making us possibly the biggest quasi-museum in the world. And it all varies, contemporary art in every possible way. We believe in two main things. We believe in art community, so artist community, curators community, art professionals community, and of course the comprehensive art fans community. The second thing that we would like to focus on in Mana is the process of art creating. And every time you come to Mana for an opening, you'll have a chance to step by a studio of an artist, see the process of art making, engage in a dialogue, ask a question, inspire, be inspired, and by that, take the art world to the next level. So we are very happy that you came here to be with us today for the first ever art conference that Mana is hosting. Of course, we hope to have many more art conferences together with Skate, and I'm thankful for Elena to give us a chance to host today this beautiful program for the first art conference we're doing here, because the other thing that Mana focuses on is not just exhibiting art, but also the programs and the content, which is as important. You see art on walls, it's great, but you need to understand the essence and the values that behind it. And this is a reason why we encourage the dialogue, and this is why we would like to be part of the discourse, and encourage professionals like yourself to be part of it, to come to conferences, to be part of panels, to write to us, to write generally, and by that just contribute more and more to the art world, because as Mana concept is the extended art community, there is a place for each and every one of you in whatever Mana is doing. Whether collecting, whether writing about art, whether being an artist, a curator, an art professional, any profession that you guys are part of when it comes to the art, you belong to Mana. So we are welcoming you here today very warmly. Thank you for coming by. And Elena, again, thank you for the opportunity to host this conference with you. And we look forward to many more to come down the road.
Yeah, thank you so much. I would like to thank Mana Contemporary for hosting our conference here today. Skate Art Market Research organizes these conferences regularly. They're called Art Industry Forum. This is one in the series of the events. We had the previous one to take place in London in May, and the following will be actually in Miami during Art Basel. So if you are in Miami in December, please come over, and you're probably on our mailing list. If not, please join our mailing list, and we will keep you informed about the next conferences. So without further ado, I would like to introduce the first panel, which will talk about the art markets. It's a very exciting panel.
Good morning, everybody. Thank you so much for joining us for this panel discussion, as Elena just mentioned. The first panel is going to focus on the art market in 2013, and we're going to be talking about some of the trends that have identified themselves in the last several years, in 2012 leading up to 2013, and perhaps we can even talk about some of the projections going forward. So we have some amazing experts on the panel who bring in a tremendous amount of experience and knowledge, and so I'm sure everything is going to be incredibly unique and very, very interesting. So as I just wanted to very quickly go over who is who. So Jonathan is next to me, Michael here, and this is Kelly. So I think we should just start with the questions, with the first questions, and I'll try and then direct it to each individual. And we'll try to keep it to about 12 minutes per question, and then we'll move on to the next question. So at the end, we'll have about 10, 12 minutes for questions, and we'll get to that. So I think The first question that I wanted to start with, we'll talk maybe to Michael and Jonathan, and we'll talk a little bit about how the art market shaped up in 2013 in terms of expectations and trends. If you can each give us a little bit of your opinion on that.
Want me to go first? Sure.
If you want to just take your mic.
Okay. All right, I'll go first. The trend is up, 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 up. Surely we've been talking about the strength at the top level, you know, for masterpieces, A-plus pieces. That continues to move, and to move in the positive direction. And every season I ask myself, well, gee, how well will that person who, for example, bought the Basquiat for $58 or $60 million do when it comes time to sell it? And, you know, I guess every season they did pretty well, is the bottom line. But it's still, look, the market is a market because it moves up and because it also moves down. If it only moved up, it wouldn't be a market, right? It would be magic or something like that. And so as the market continues to go up, I have to feel like we're getting closer and closer to a time when it won't go up or it may go down. Still don't know when that is, but what's interesting about 2013 is how the tide lifted all the boats, the emerging artists, middle-tier artists, secondary works of a lesser quality did well. The demand is widespread. It's various. And Chinese contemporary art is now nowhere to be seen. I think that's pretty interesting. I think there's some wonderful Chinese contemporary artists, but the market isn't focusing on them right now. I'll start there.
Okay. I have a different view. The market is a market of sale prices, and a market of returns. And we focus on returns, not sale prices. So all the headlines in the papers talk about records, and truly an amazing amount of money is being spent on art. Our focus is, well, are people making money in the buying and selling of art? And so we only look at where we can have transparency, which is at auction. So in order for anything to make it into our indexes, it has to sell at auction twice. So we have a purchase price and a sale price, so we know what the return is, and then we create an index that best fits all the returns that we see. So if you look at the last 2 weeks, while there were some enormous prices paid, the Impressionist and Modern market, we had about 180 repeat sale pairs. I think the average return was about 5%. Even in the post-war and contemporary, where we had about 120 objects that we could find a prior purchase price at auction and sold at auction, the return was 8%. Now, 8% is great, but at previous auctions, just in May, the average return was closer to 10%, and in our database of almost 5,000 post-war and contemporary paintings that have sold more than once at auction, the average return is about 10%. So while all the news is record, 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 underneath all of this is, you know, it's sort of just meandering along at best. And so, you know, our index, our World All Art Index to date is still down through October. It's down about 1.3%. It had been down almost 5% earlier in the year. So the market is interesting. It is a market of many little mini markets, and those can have dramatically different results. The best market of all is traditional Chinese works of art, which is just going crazy. I mean, if you think the post-war is crazy, the price rises in the traditional Chinese works of art have really been spectacular, followed by post-war and contemporary.
Just a very quick follow-up question, just because we have a little bit of time left. If you're looking at the low returns, are there other factors that are weighing down the amount of money that the collectors are making at the end of this? Or are the auction houses charging more in commissions? Is this inflation that's factoring in?
Right, that's a good question. We don't consider commissions, okay? We just, in our database, what we say is, how much was someone willing to buy this for some years ago, and how much did they have, another person, pay for it today? So, you know, all the transactions costs are lumped in. So it's the actual change in value between a willing buyer and a willing seller over that time period. So the lesser returns have nothing to do with the auction house commissions, other than the implication that as auction house commissions come up, if these are rational buyers, they might be willing to pay a little bit less for the painting. But that, you know, not much. But, you know, the idea is that I think the high end of the market, the number of billionaires being created, continues to grow exponentially, while the person who used to pay in the hundreds of thousands of dollars, or even the low millions of dollars for a painting, there may not be as many of those, or they may not be as wealthy as they were, because income distribution and inequality is just growing enormously.
Did you have something else that you wanted to add?
Yeah, I wanted to add something. You know, the May Moses index is a tremendous indication of the performance of the market, you know, when you skin the cat in a particular way. I mean, the other thing is you look at the total volume of, and you mentioned this, Michael, total volume of sales this past season, and, you know, Christie's in one night sold $680 million or $90 million worth of art. And last season was a tremendous success, and it was more like 495. I mean, it's increased, what, about 50% or so. There are other indicators which would suggest a dramatically transformed market, and there are a lot of forces at play in this changing market. I'm thinking about consortiums of people coming together, you know, people coming together to invest in a work of art as opposed to an individual who's just buying it. I'm thinking about how the auction house allows or permits someone who guaranteed the lot to bid on the lot and essentially get a discount for doing so and raising the price. So if person A guaranteed a painting at $20 million and they really love it and that's why they guaranteed it, but the painting starts to sell, you know, people are bidding on it 20, 21, 22, 23, you know, they can keep bidding. And who knows, maybe they're getting a 50% discount on their bid. So in the end, the hammer price is 30, but they are only paying 25 because they got a 50% discount on the upside. I mean, there's so many ways.
Yeah, I agree.
And it gets.
But first of all, you know, one of these cases may come to court where the owner of the work is not really allowed to bid above the low reserve. All right. Now, if you're the guarantor, you own the work at the low reserve. If you're now bidding above the low reserve, it's not clear to me, you know, how, in quotes, legal that is. And, you know, what the art market needs to worry about is it being looked at as a rotten egg, that, you know, for the average person, the cards are stacked against them. And so if there's insider trading or insider bidding, and these things continue to be permitted, they will eventually hurt the market in the long run. And so, yes, there are different forces driving the high end of the market. But we look at all the market, and we look at each object separately. So our index, most financial indexes are capital weighted in the sense that the bigger the companies, they have more impact on the index. We decided when we started this not to do that because if you want to buy a share of IBM, even though it's a big company, you can buy one share. But, you know, if you wanted to buy a square inch of the triptych that just sold, you know, you couldn't. So it would be unfair to weight the indexes in that way. So we have a dollar for dollar index so that the return on the very expensive painting is the same, counts in the index as an inexpensive painting. But I think so much of the market is being consumed and written about on the high end that, you know, there's other part of the market which is really an important part of the market, and who knows, you know, I was thinking about it this morning on my ride out here on the PATH train about, you know, where do the auction houses make most of their money? And it's not clear to me with all the givebacks they give to these high-end paintings that they make most of their money more on potentially on the middle of the market than on the high end. And if, you know, and that's the market they could lose in a minute if it turns out to be, you know, sort of adversarial against the bidders.
Well, may I pipe up?
Oh, absolutely.
Join this boys club. First of all, thank you so much for having me. And I've been sort of digesting a lot of this stuff too. I will say that, you know, the stock market is going crazy right now, and bonds are not, right? So I think some of the best returns you can get are upwards of, like, you know, I think, I know about a fund that's doing like all U.S. equities, and it's up like 23, 26%. And the bond one, one through Putnam that I know about is like maybe 2 or 3%, right? So it makes sense that people, the world's 2,200 billionaires, right, are looking for places to put their money. And so in that case, you know, arguably a 6 to 8% return on a painting is not, you know, is not the worst. And it adds this sort of added cachet, right, of seeming not only wealthy but sophisticated. So not only do you have the house and the car and the trophy wife, but you have the paintings to go with them. And so there's the intangible perk to that. Secondly, I will say that it's very much a trophy hunter's market in my sense right now. So on the one sense, you had like, I think 11 or roughly a dozen pictures sold in this last round for over 20 million. And I think a quarter of those sold for, you know, over 50. So if you're just even looking in terms of total sales, a huge amount of those sales can be contributed to a room full of pictures. So that's a pretty top-heavy market, and that's pretty frothy to me. The thing that I did want to see was how well the things were selling through, you know, in the day sales, which to me is almost a bit of a truer read of the markets. And I think the sort of the pleasant surprise of this season is that all the product did move for the most part. Now, do I feel like sellers are beginning to get a little greedy? That's where we see them eating into the returns. Like they're beginning to ask just about as much as you can ask. So, you know, if you figure that your parents were putting their house on the market and they were just going to ask the boffo price and you were like, gosh, I hope we hit that, you know? Like that's basically what's happening, you know, painting over painting in this season. Would you counsel your parents to do that? I guess if there was enough, you know, schmoes around willing to buy it, yes. But is it, you know, sort of the best thing for that neighborhood and for that housing? You know, you could argue yes or no. So I think we are nearing some sort of a season of buyers beginning to reckon with how willing they are to, you know, keep, you know, paying a premium price. Will they for those dozen odd trophy pictures? Yes, but I think the question will then be in the new year, something for us to all watch is how are things doing in the day sales? You know, and for me, the read on Impressionist and Modern was not great. I think Christie's didn't bring it. They did with Contemporary, but Sotheby's had better material. And so again, if you have the trophies, then you have a really great sale ahead of you. But if you don't have the material, then if you can't sell what you have, then that's a little red flag at least to be watching ahead. in the New York.
Sales in the Impressionist, were, you know, returns of 3, 4, 5% on average, and the night sale was like 8%, all below what their historical numbers had been. But this idea of, you know, sort of seller expectation is a really interesting one. And we get the opportunity to sort of look at this. We've been toying with something of a way of trying to get a market sentiment reading that's a little different than going out and asking 50 connected people whether they're going to buy or not. And so what we've been doing is we've been using our information on the prior purchase price and the low estimate for the sale. And that difference, that return, gives you an idea of what the expectations of the owners turn out to be. And because at the low estimate, you have to sell. All right, so you have to sell at the low estimate. If it's below that and you have a reserve below the low estimate, you might have to sell there. But the only true number we as outsiders know that owner is willing to take is the low estimate. And so the return to the low estimate is an idea of what the expectations are. And what remarkably over time, which I think is just really weird, is that before 1990, owners expected a return of 7, 8, 9, 10%. Then we had the 1990 crash. And the expectations went down to almost zero. And now owner expectations move along almost zero when you look at this measure. So their owner expectations are really not high. There is a dramatic difference between the day sales and the night sales. So we can do that as well. The night sales are much higher. They're like 4 or 5%. But they're nowhere near what they were before 1990. So somehow, you know, the owner expectation is very interesting. It's a little bit hard to fathom.
It's very interesting. I can only give you my sense of the market from looking at the catalogs, going to the previews, and watching the sales happen. My sense, and it's obviously subjective, but it's pretty strong, it was that expectations were extremely high, and that the estimates felt very strong, especially in the evening sale, but even in the day sales. And what was remarkable about this season was the strength of the bidding despite the high expectations. Typically, you expect a high estimate to discourage people from bidding and a low estimate to encourage people to bid. But I was struck by some of the estimates. And the estimates, you know, it's so tricky. You think of the two big de Koonings that sold this past week at Sotheby's and Christie's from the 1970s. Same size, 2 years apart. The Christie's painting had an estimate of $20 to $30 million, and it sold for something like $34 million. The Sotheby's painting had a higher estimate, $25 to $35 million, and it sold under the low estimate. So I felt pretty encouraged by that because I was of the mind that the Christie's painting was so much better. So there's justice in the market, and the estimates were irrelevant, and somebody followed my advice telepathically and paid more for the Christie's painting. And then I spoke to my friend, and they said, no, you're all wrong. The Sotheby's painting was estimated too high, and so bidders were discouraged, and the Christie's painting was estimated lower, and that encouraged bidding, and that's why that painting did well. So, you know, what am I supposed to do with that? I mean, when you listen to the market talk,
Yeah.
there's more than two ways to describe any given transaction, let alone the entire market. So I'm always impressed by those people who are active in the market who succeed more often than not, you know. Those are the people, you know, we want to ask, whose opinion we want to ask. But they're in the market. They're actually probably manipulating the market, participating in an aggressive way to affect the levels. And, you know, part of these coteries of bidders and buyers and sellers and so forth. They win all the time.
Yeah, honestly, I think, and that's something that the market, we as the press should look into that more, particularly the third-party bidders and the kind of the behind-the-scenes market makers. I think if you pool your money, with any number of guys, I think sort of you can be willing to pay whatever you want to pay, and then that resets the high bar and recalibrates prices for everything down the line, right? So all Warhols are probably now just a little bit more expensive than they were, a couple of weeks ago before one sold for $100 million. So what does that mean if, Warhol's sort of the Dow Industrial Average for the contemporary market? I think a lot of power is in the hands of a very few, and that's shouldn't be shocking to anyone, but I think it would be a little bit caveat emptor about getting into that game. You better bring brass knuckles or a beefy guy, because it's a little thuggy sometimes in my estimation, and opaque. And for a reporter, I want to know everything. So I'm still trying to figure out a lot of who those players are. But I think it's worth knowing that they are. There are a lot of them traders in other fields that are much more heavily regulated, and they come into the art market and they think, oh, great, there are no rules about any of this. So let me apply the things that I know I can't do in other markets, and let me apply them here and make hay while the sun shines. So, I think it's an interesting market. But I also think you can't underestimate the wild card factor coming out of Latin America and China. I mean, their presence in these sales cannot be underestimated. Again and again, I saw mainland bidders paying really premium prices. Again, they're going right to the top, so they're not building collections from the middle prices from 50,000 to 500,000, and then graduating up into, they're just going straight to the things. And in that case, the higher the estimate, then the more important it is, and so therefore they want it. I think that's how they're reading those estimates, not as an inducement to bid, but as a, does this demarcate a trophy or not? And again, I think I was just in Brazil a few weeks ago, and there's a lot of collectors there who are beginning to expand out of their holdings, and they're buying more. So, I think one of Steve Cohen's pictures went to Mexico, and others as well. I think it was the yellow tar. The yellow tar and well, let me go back on that. There was it was a picture. It's in my notes. If I don't read my notes, then I don't like to quote myself unless I'm looking at my notes. But anyway, I just feel like it's a whole bigger chessboard now, right? And so here we are in the first couple of generations where everyone's up at the table. So for many, many years, the U.S. and Europe had first dibs, and arguably, Asia and Africa, and huge swaths of the world were just like not participating at the same level. So what does it look like to have an art market where everyone is making enough money to participate? So I think the market is still trying to figure out what that looks like and how much they're willing to spend to play ball. But, the same day that Sotheby's was getting ready for its big sale, they sold a diamond in Geneva for $83 million. Nobody's going to be wearing that. Subdued probably put it in a safety deposit box, but it tells you that the whole world has changed, that can just sort of happen, and it's sort of a blip in the day when everything else is going on. So there's a lot of money, and it's being spent a lot of different ways.
So I just wanted to, my second question was actually a lot about the recent art auctions, and I'm very happy that you guys went straight into that. So we talked about the record prices. We talked about the increased amount of attention given to the Impressionists, to the post-war auctions, evening sales in particular, and as pretty much most of you pointed out, there is an increase in the number of lots that are being guaranteed by third parties, and that essentially is changing the nature of the market itself. So it is taking out the relative transparency of the market, and it's adding a whole different facet to the way it works and who's actually bidding, who's not. It's not an open market in the way that one expects it to be. So I'm actually going to change my third question and direct it to that more. And as I think, Michael, you pointed out, the people who are now coming into the art market are coming in from the world of finance and from other markets, as you, Kelly, pointed out, that are highly regulated. And this is an area that doesn't have regulation at all, and it is really a playground for them to set their own rules and to enforce them and to really make this, shape it in such a way that allows them to make more money and to I think not even, I mean, not manipulate it, but let it behave in a way that they understand, that they know how to work in that world. So my question to all of you, and Kelly, you know this very well as well, how do you think the public auction is going to be changing in the future, because these third-party guarantees are going to be much more frequent because the prices are rising, the number of people who are investing is increasing, and so the auction houses are definitely not going to be willing to carry that risk on their books, so they're going to be transitioning that to someone else. So how do you feel the existence and the spread of third-party guarantees is going to be affecting the actual process of the auction, the transparency of the auction itself?
Well, I'm going to try this. Is this a possibility?
Yeah, it comes
Okay, I feel like I keep moving the stand around. Okay. I have more transparency in my movement now. Well, I think we know from other markets what happens when you leverage and leverage and leverage and leverage, right? I mean, how far out can you build a cantilever before it topples head first? So I think the blessing and the curse of the auction arena is that you do have this presumption when you come in that there's a vanilla buyer and a vanilla seller, and that the auction is a neutral just broker, a go-between. And I don't know that that's really the case anymore, because I think they would argue that they're trying to be, but when they are in fact staking so much of their money, and they are actually, they're beginning to do that, again, staking more of their own money in these sales in addition to offloading the risk to outside investors, but they are doing more of that. I think it was a good 20 or 30 pictures, 29 pictures or something like that in Sotheby's sale. And it's a public company, so they've got a lot on the books that they have to reckon with and that they needed to do really well with. What I would want to know as a collector moving forward is, you just don't want to be the last kid at the, when the musical chairs stop, right? You don't want to be the one without the chair. So what happened in November '08 is that the houses had already staked all these pictures, and then the market changed, and it's a very flexible, nimble market, and the auction market is planned out months and months in advance. So the auction houses had staked all of this money, I think roughly $60 million in these sales, and then they ended up buying the work and owning it when the party stopped. So I think the guarantees have more to do with the two houses competing against each other for these trophies. They want the biggest share of the pie, and they're willing to make whatever financial arrangements they need to in order to secure the consignments. So that, on the one hand, makes it a seller's market, right? If you happen to have the world's best Picasso, then you can pretty much just ask for however many carats you want, right? Because the houses will offer you that in order to have the right to sell your picture. But I don't know that that's really great for the buyer. I don't really think that's a buyer's market in that sense. Now, what you get out of it as a buyer in this sort of peaky season, right, when everything is sort of, I think, a little frothy, is that you get the chance to maybe go for the dream girl, right? Like maybe all your life you've wanted this Roy Lichtenstein, girl winking at you, and that collector is never going to part with that picture unless it's a frothy market, unless they're going to make some really decent dough out of it. They're not going to take it off the wall because it's a really good investment, it's a pretty picture, it's an iconic artist, yada, yada, yada. So as a buyer, you think, okay, I'm going to have to pay a premium, but I want this girl, I've been wanting this girl for a long time, I'm just going to go for it. That's the only way in which this is a buyer's market, because everything else is basically audition and tap dance for this picture. I mean, in this particular season, which I think a lot of collectors get eventually a little frustrated about. At first, they're dazzled by the supply that comes out. They're like, oh, look at all this good stuff coming out of the woodwork. But then they begin to kind of choke a little bit on the asking prices, and eventually, there's a pendulum to it. So I think for people watching this market, it's about understanding how that pendulum swings, and knowing when to get off before it starts.
Do you think that knowing that a certain lot is guaranteed deters bidding, or do you think it attracts bidding?
Ooh, Jonathan, you bid on pictures.
The clients we work with at City Private Bank who are participating at that level in terms of guaranteed lots, because those are the most expensive oftentimes in a given sale. If they really want the piece, they really want the piece. But if they're trying to figure out if they're going to go for this or go for that, it'll discourage them.
It will discourage them.
Yeah, because it means it's already sold, or it means there's already demonstrated interest in the piece against which they will have to compete. So if you're someone who loves art and is very passionate about art, and once you decide to go for it, it's because you love it and you want it. And these are the people I know and work with. You're going to be very disappointed if you don't win it, and so you're try to fall. It's like walking into a party, I guess, and say, I can fall in love with any one of these people, but I'm going to go for the one who is, not being accosted by 14 other suitors. Sort of, maybe that's the kind of thinking.
Well, yeah. Would you hit on the girl who's like flashing her engagement ring? You would be like, well, maybe.
Right, exactly.
Maybe you would, but don't, because that's gross.
I think the guarantee.
You go into the open house and like there's already somebody that's like, I've already put the asking price on the table. I'm already willing to pay that. You would be insecure. You'd be like, maybe I should go for the other. Like everyone knows what it is to get a deal and to want to pay decent money. You don't want to overpay.
You know you're going to have to pay a premium, and that's what's happening at the auction market. With all of the guarantees, I think it's essentially becoming more and more a retail market. And it's not unlike walking into whatever, J. Crew in October when the new clothing is at full price and saying, I want it, I'm going to pay for it. That's what people are doing in the auction market, where traditionally, historically, it was a place for merchants in the business, of course, to buy and sell things at a wholesale level. It hasn't been like that for a long time, but it's changed.
In all of this, if you're a bidder, I had good friends in the antiques business, the Saks, and they were the great American antique dealers. And I used to talk with Harold, who was the bidder for the family. And he'd say, unless I know something that everybody else doesn't know, all right, there's been a misrepresentation of the piece, I'm not going to put my paddle up if no one else is bidding. All right, because either I know that it's something that no one else knows, or else, if there's no one else interested in the room, then maybe I shouldn't be interested. Well, this is a dealer perspective, but
Right.
because it's going to potentially be hard to sell, I'm going to sit with it because everybody in the room is not buying it for a reason. Either it's overpriced or they hate it. They just don't like it.
It's just bad.
Yeah, but so I think I would be encouraged in some sense by a reserve, by a guarantee, as long as I knew that the guarantor couldn't keep bidding over the low estimate. All right, that is to me that and groups of people buying the painting and then knocking it down later. These were both done away with in the rug auctions 30 years ago. And, we're going to have to go back to that. We're going to need a DA like New York used to have, and, and sort of do that.
So basically, you're calling for regulation of the art market?
No, I'm calling there are a set of rules.
Adherence to the existing rules is what he's calling.
Just adhere to the existing rules.
Yeah.
Because as soon as the market gets to be, this is an insider's market, it's going to die.
There's another interesting, it's a wild card. I don't know how robust a wild card it is, but museums are increasingly selling their treasures. These are things that were always off the market. When a museum acquired a work of art, it essentially removed the work of art from the market. What's the value of the Mona Lisa? I don't know. We have to insure it, but beyond that, it's an irrelevant question. I don't think the Louvre is going to sell the Mona Lisa anytime soon, but the Pennsylvania Academy, which is a museum where I used to work and a museum very dear to my heart, is in the process of selling one of its two. It's not like it has a warehouse full of Chamberlains, as does Dia, for example. It has two hoppers. It's in the process of selling a major hopper, the first hopper to enter a museum collection in this country. You know, so that's $28 million on the pre-sale estimate. How many treasures like that are there at the Academy alone? How many treasures like that are there at museums in this country? Now that they are beginning to feel more free to sell on the open market their treasures, I mean, imagine if they really started unloading them, you know, would there be enough buyers?
Well, I think that Alice will probably just snap that up and take that to Arkansas, and then it'll end up in another.
She can buy that
in another
painting,
museum.
you know, like you and I buy a J. Crew sweater. But I'm just saying,
Yeah.
there's a lot. I mean, given the way the market
Yeah.
is valued now, there's a
There's a lot of dicks. Well, and
some
for me,
museums won't be able to afford to insure these things anymore. Like, you know,
Yeah.
literally, how can they keep them? It's like living in a house that, you know, that you can't afford
Yeah.
because the land value has gone up.
well, I have this philosophical twist too on it in terms of museums selling really marquee pieces that are firmly within the roles and rosters of art history, right? In order to acquire new art. Like, I think a museum should absolutely be acquiring new pieces, but it is something to think about when a museum is saying, we're going to sell off our sure bets to then spend that money on unsure bets. I'm not sure if I were investing in that museum, I mean, if I were advising that museum, that I would tell them to do that. I mean, Hopper he's in the bag, right? So you're going to sell that off and buy, you know, a TK. I won't bash artists because they could end up becoming the next Edward Hopper. But I just mean, I think there's an interesting trend for museums feeling like, oh, they need to keep pace with these collectors, right? Like museums are like, oh, we need to keep pace. If a gallery is putting out an amazing hot show and it's almost sold out, like we need one of these pieces, and that sort of desperation then tells them, well, let's just take the best thing off the wall and we'll sell that and we'll get a big bunch of money to buy a bunch of things that could end up becoming fair to middling. You know, I don't know. It's an interesting trend that we don't know how well those bets are the second time around, but we know that the first ones were pretty good. We have no idea what art history is going to decide about the artists that are, you know, still alive. I mean, I think we can say that Jasper Jones is in there, and there's a good amount of other ones that are in there, but honestly, like, you know, art history is pretty brutal mistress. So you look back to the 1700s, you can read histories about the art market in the 1700s. Oh, people going crazy about this guy, crazy about that guy, and we don't even know these guys anymore, you know? So I think, you know, if you're going to get into contemporary art, you already have to have a pretty big appetite for risk, and you have to be like, I love it for my lifetime, and we'll see what art history decides. But that's what a collector should say. A museum should be like, we want it forever. You know, I don't know. I think it's an interesting trend happening with museums deaccessioning now. Pennsylvania Academy, you know, if you're deaccessioning because you're an academic institution and you're not a museum necessarily, but I mean, I don't know. I'm thinking about maybe not that one. I'm thinking about that yeah, the other one. It's a museum. Yeah, it is a museum. Okay, well, so yeah, so that's my 2 cents on that.
It's a museum, and Edward Hopper is core to their collection and their history. But you just have to look at these. I mean, whether or not a museum should deaccession is one kind of question. We were talking about the market, and I'm just saying, what will happen to the market if all of the paintings that and sculptures, what have you, that are not always on view, and they're sitting in storage, and people think, oh, well, Eli Broad is right. We're not showing it on a regular basis. We may as well just sell it. In the sense that Eli Broad feels that museums should use their collections and show them and share them, and it's a crime in a way when these things sit unenjoyed, unstudied in the warehouses. But what will happen to the market? Yeah, we can look at each of the deaccessions and have a conversation about which ones are ethical and which ones are not. The DIA gives us that opportunity too, because they sold so many things, some of which perhaps shouldn't have been sold, but another question.
Took them and went gangbusters. I mean,
Right.
that's,
Yeah.
the market will eat those up.
So I just wanted to...
Oh, just one last.
Yes.
We've been talking about this upper end of the market, and it seems to be booming along, and wealth is booming along. I just wanted to say that if you think it's bad now, what happens when the finance community, as a financial instrument, starts to think about art as a financial asset? Because then the prices we are seeing today, you might as well forget them, because it will be so much higher. Right now, there are financiers in art, okay, but the financial markets are not into art yet. If they get into art, then that's going to be the next round to drive prices of these scarce commodities. These are scarce commodities. Great art is a scarce commodity. It's not being made anymore. There's a limited number, so these are all scarce. So I think, can prices go higher? I think they can go higher, especially if the finance community decides to look at art as a financial instrument.
A million more questions, of course, are coming out from these topics that we have looked at. What I wanted to do right now is thank you all very much for sharing your knowledge and your points of view with us. I wanted just to take maybe 10 minutes or so and open the floor to questions from the audience. We'll pass one mic, yes? So if you would like to ask a question, maybe you can introduce yourself and then ask the question and direct it to the specific member of the panel, please. I'll give mine.
Yes, sir. We're a little bit short on mics.
Hi, I'm Drew Arstark. I'm the director. Get up? Okay. Drew Arstark, director of Jim Kempner Fine Art. And to Mr. Moses, I think you said something about the highest market being the traditional Chinese market. Is that correct?
Yes.
What happened with the contemporary Chinese market?
Well,
that's just such an interesting...
That's a different market.
That's amazing that they're
I understand that. But the traditional Chinese works of art are works created before 1950, from the year 1000 on. They're screens, scrolls, furniture, and the wealthy Chinese, unlike the wealthy Americans at the turn of in the 1800s and the 1900s, are deciding to repatriate their cultural treasures. And the traditional Chinese works of art have been an active auction market in Hong Kong, New York, and London for 75 years. And so this has been going on for a long time, and recently, over the last 10 years, but most likely the last 5 years, the prices have been going up astoundingly because they, again, true works are in limited supply, and they get bid up amazingly. We don't study the traditional Chinese, the contemporary Chinese market. Only, if a contemporary Chinese painting came to auction at a purchase and sale, we would include it in our database. We have a few, but everybody, that market has collapsed. And in some regards, relative to where it was just a couple of years ago.
There's a number that I saw last year in one of the indexes, and I think the Chinese contemporary segment fell by 46%.
Yeah. Remember that in 1990 to 1991, over the next 5 years, and when the market peaked with the last bubble, all our markets went down, our indexes went down 65% over the next 5 years, and stayed down until 2003, 2004. So the art market can have long periods of poor to negative returns.
I would just say too that traditional Chinese is also, there's two really interesting things I think work in that market. One, you have, I think, a really compelling argument that folks over there are saying that if we are willing to spend, $30 or $40 or $50 million for the icons of our culture, then who is to say that the icons of their culture, should not merit those same prices? So there's a little bit of a reckoning happening there where they're seeing us pay $30 or $40 million for Matisse, who is the Matisse of, the Ming Dynasty. I mean, there are very few really amazing pieces, by some of these artists happening. There's also the second thing, too, where I feel like the math is a little funny because a number of the really high trophy pictures that got the really huge prices, like the $65 million Chiba show, like the buyers are not necessarily paying for those. So there's some reneging happening, and that's a growing pain that sometimes happens in a market that's developing. And the dealers and the auction houses there are trying to both, school them on sort of a bid is a bid is a bid is a bid, and you're sort of on the hook for that. But they're also, it creates this feeling that the really high prices that are for some of these Chinese paintings are like a temporary price that, then later the buyer will then go back to the auction house and renegotiate a lower price. So I have come to a place where I don't always trust the records that I'm hearing out of China, or at least, I report them, but then there's always this asterisk in my head about whether or not they're really selling. So that, again, is no disrespect to the collectors there. It is evidence of a very young, growing auction market, and a lot of guys who have made a fortune in the last few years who are very young and eager beaver and trying to figure out how to play art, and they're still learning. So I think that's a little bit another intel behind what's happening with traditional Chinese.
Oh, there is one here. Yeah.
Richard Lee, Strophius Art Law. I had a question for Michael. Given your extensive knowledge of how difficult it has been for the art funds to actually produce plausible returns, you mentioned that when that similar phenomenon would enter the marketplace, it would make a tremendous impact. How do you or the panel feel about how plausible that is, given the difficult history the funds have had?
Well, as far as I'm concerned, the funds aren't particularly transparent, okay? So these are, it's a little bit like private equity. It's hard to get a true reading on what's going on. But as soon as you find, my solution to the Detroit Institute problem was to offer them the idea that we should take $1 billion of their art, wrap it up into a initial public offering, sell it on the marketplace at a certain price if take it for 50 years, and at 50 years we then decide whether to sell it, because it would be sold at 50 years, and at that time Detroit could, if things got real good in Detroit, they could buy it back. If not, it would be sold, but for at least the next 50 years, it would stay exactly where it was. And so that it would be like an exchange-traded note or exchange, the magic people of finance would, could figure out something for it. But that's the kind of thing I'm thinking about, rather than these small little boutique things that are really dealing on the mispricing in the market. They like to try and buy some stuff that's really cheap and then sell it higher, the widows and orphans kind of funds, which is unfortunate. But when it really starts trading in that kind of a way, I think it could turn out to be very, very exciting.
All right. Yeah.
I would just add, to underscore what Michael just said, most of these funds, I think all of them, keep their net values under a certain threshold so that they don't have to report to the regulatory authorities on exactly how they're pricing their assets and trading them and so forth and so on. So the minute a fund hits, I don't know what the number is, but $200 million, let's say, they close it. It's done. And they start a new one. And then they close it, and they start a new one. So all these funds, they're actually pretty small. The role that they're playing in the market, it's a role, but it's not like there's no one fund that is, so influential.
Right. And they don't mark to market. I mean, there are vehicles that would allow them to mark to market if they wanted. They could use our index or somebody else's. They could mark the stuff to market, and they don't. So, I think it, too, is the beginning of these kinds of things. And, people are playing around, and they're doing okay, but that's not the thing that's going to make it. You can't build a financial industry structure for art based on mispricing of assets. It just doesn't work. It doesn't work in finance, and it won't work in art. You need to build it based on the true returns that are achievable, like people can achieve in the S&P 500, or just by buying the S&P 500. If that's not enough to stimulate you, then there probably won't be a market. But if it is enough, then you can do it there, and then you'll get some offshoots of people who are trying to manage it better than the market return, but at least you'll know what the market return is.
Hi, Tanya Tchaikovsky. Several of you mentioned consortiums, and I was wondering whether the art funds and the consortiums are one and the same, or whether you would define the consortiums differently.
I don't know anything about consortiums.
Okay. I think an art fund tries to be a little bit more official. Hello, by the way. Tries to be a little bit more official in the sense that it is a group of guys who will go out and shop and pitch an idea to a certain number of investors, right, in a sort of brochure type of a way, right, about like, this is the types of art that we want to buy. We feel like we have a special eye. We're going to go in and get the bargain that no one else sees. We're going to hang on to it. They will say they're going to hang on to it forever. They very rarely hang on to it for more than 5 or 6 years, maybe 10 years max. I had a great conversation with the guy who runs MGM, the resort out in Vegas, and he said he was getting out of an art fund last year because he's like, at first you just think it's like a group of guys, buddies, like you're just going to go in and pool your money and, get more bang for your buck, get a few trophies, like hang on to it. But then very quickly it becomes this kind of frat house situation where eventually like one of them wants to sell and make a profit. Like they always want to sell it a little bit more quickly. One or two people do. If you're going into art thinking of it as an investment, then it's just really hard to have the patience to hang on to it for 10 or 20 years that's when you're really, I think, arguably going to see some of the better returns. So eventually these funds are going through this like quirky, adolescent phase where then they all just want to sell it off, and then they realize like, oh, I want to sell this one, I want to keep this one. And so, I think that's some of the growing pains that you're seeing in art funds. And that's how they seem to play out the life cycle of those things. And they just liquidate and wish each other well and pool whatever they can do and go on. The consortiums that I think Jonathan and I are referring to, it's a much smaller, potentially group of people. I mean, I could think that when we're thinking about the ones who are staking these, the very biggest, most expensive pictures in the auctions, I mean, I would wager that it's maybe 24 people max, and could be much less, actually. I mean, if I think about the real market mover, the people who are willing to play ball at that very high level, I think it's, a handful of dealers, a handful of secondary market dealers, 1 or 2 collectors who just has so much cash he doesn't know what to do with, and he's bored, and he gets convinced to go in and, I want to go home and stool, pool and stake this and stake that, and, it'll look good anyway, and if not, we'll buy it from you, blah, blah, blah. Like, I think we're talking a very small group of people, which is also why it would be fun to know exactly who those people are. So that's one of my parlor games, in addition to figuring out who bought the bacon, is trying to add some more clarity to that, because I think that the consortiums that they're talking about are really small group of people. Yeah, the art fund is meant to be a day in, day out sort of regular. You get reports, and it's kind of almost like, joining a club, and it's an extracurricular. Whereas the consortiums just come together in big moments for big sales, and they pool their money and they bid on things. And it would be interesting to me if 3 or 4 people are going in to stake a picture, and then because the laws are, as Mike has pointed out, allows them to do that, if 3 or 4 are then bidding, if I'm a Joe Schmo in the auction room, I think, oh, 3 or 4 people are going after this picture, you know, I should join in on this. It's every bit as good as the auction house has been telling me for weeks and weeks that it is. You know, so it'd be sad if you were if it's a room full of shills bidding on it and they're hoping to stake one nouveau riche buyer from somewhere far away for it. I suspect that's probably happening a little bit. I think they would push back and be like, no, it's a global market. I think it's all of those things, but it's definitely not transparent. So that's a little bit of clarity we're trying to get on the market right now.
All right, thank you. Well, then I guess I'm passing the microphone back to Christina.
I just one very last question, since we've been talking about the art investment funds, and I think we'll conclude this part of the panel. Have you, Jonathan and Michael and Kelly, have you seen a proliferation in the number of funds in the last, say, 6-7 years? Just guys who are entering the market because they see the high prices, maybe not realizing the returns are lower than, you know, the 12% that they're expecting, and now they're just jumping in saying, okay, this is something new and I'm going to try and invest in this alternative asset.
Yes.
But we also see funds going away.
Yeah, exactly.
They come and,
Yeah.
you know, there's probably more coming than there are going, but
There are a lot of funds trying.
Yeah.
You know, not all that are getting the financial returns. I mean, art is this sort of wonderful thing. It's the only asset that has 3 beauties. It's beautiful to look at, you know. It's fun to collect. You know, a lot of people have a lot of fun collecting. And lastly, you get a decent financial return. Tell me another asset that has all those 3 beauties.
Well, I would consider jewelry art, so we can pull that.
Okay.
well, when you invest in a fund, of course, you lose out on 2.
Right,
Yeah,
exactly.
that's what I
So why bother?
Yeah, that's
Exactly,
what I think.
I think. But, you know, that to
I
me,
agree.
the thing that would make the funds interesting, if someone would do this, is you don't want a general art fund because people are buying art, okay? What you want to do is for the person who is buying post-war and contemporary art, but from a risk-return perspective, would like to have some diversification into old masters, but doesn't want to buy them. If you had a narrow old master fund, then from a portfolio, you know, a finance portfolio effect, you could see that person buying some of the old master fund because, you know, it's good for them from a financial point of view, but they don't want to have it on their walls. So I think if you had narrow funds, then you would get to see people doing this, and they were marked to market, you would get some more traction.
Thank you all very much once again. It was incredible talking to you and listening to you. So I'm just going to give you the microphone and you discuss the rest of the program. Thank you all very much.
All right, thank you so much. Amazing discussion. Thank you once again. And now we have lunch. So there's just lunch, and we will start the second panel, I guess, around 2 o'clock. And then I also wanted to say that Mana will be doing tours of the facilities after the conference around 3 o'clock. So for those of you who have a little bit of time, I suggest that you stay and enjoy it.